And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends, family, and fellow futures traders. It's time for the market forecast. Today is Thursday, May the 26th. I'm John Hoagland. Thanks for trusting me with your time. Hopefully we're all feeling happy, healthy, and hungry this morning. Got a day full of opportunities in front of us. We're always going to be focusing, as usual, on context, risk management, and patience. Economic numbers this morning at 7:30. The GDP preliminary came out, also kind of a revisionary of the first quarter. We're looking for minus 1.3%, came out lower than that at 1.5%. Markets are currently holding on to some small gains. Jobless claims this morning, initial jobless claims was expected to come out at 215,000, came out a little bit lower than that at 210,000. However, the continuing jobless claims expected at 1,310,000 came out at 1,346,000. So some good numbers, some bad numbers. As far as news is concerned, things I'm focusing on this morning, stock index futures were higher early today, still holding on to some of those gains after the early numbers this morning. Alibaba has beat expectations, as did discounter Dollar General, perhaps a sign for how Costco's earnings will come out after the close today. Apple has stated that they expect not to increase production of the iPhone this year, citing disruptions in China and stalling demand. Crude prices remain firm, but range-bound after a small drop in inventories announced yesterday. Looking forward to getting into the charts and seeing all this today. But as usual, please make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are all welcome here. And make sure you subscribe to our YouTube channel so you can get notified when we do go live. A quick look at the VIX, the dollar index, and the yield on the 10-year. The VIX down slightly, back down below 30 at 28.17. Dollar index about flat, 102.04. Yield on the 10-year continuing to slide ever so gently to the downside, down at 2.74%. As always, I gotta say good morning to everybody. Chilling with Dylan first in the room this morning. You win the prize. Charles March, Melk, I should say, good morning. The Life of Brian, good morning. Tom and Rick, my brothers, here with us today. Family and friends here. Good morning, gentlemen. Love you much. Tachyon, Jack Doherty, always a pleasure to see you. I Print Money, I love that name. Frederico, Bill, Terry, Scott Saw, and he conquered. Marcelo, good morning. Shaw, good morning to you. ZK, good morning. Theo, Zachary, Keith, good morning. Vince, James, Will, Rusty Golfer, my spirit animal. Glitter Sandwich, good morning. Trading Research, John Doherty, JD, always a pleasure to see you. I wish I got the opportunity to see more of you. Robert, Mid-Country Gaming, Kevin Laffey, good morning, sir. Mike, Sarah Hall, good morning. Prayers and love to you as well. Vince, thank God for giving us another day to participate in these markets. Christo, good morning. Dr. VJ, Mason, good morning. Spring is here. Mason is in Colorado. They had a little bit of a snow event over the weekend, but apparently things are a little bit warmer. Nice to see that, Mason. You got some nice weather out there, hopefully to walk your beautiful dogs. Rob T, good morning. Isaac, Amos, Stephen, Murph, just want Nasdaq to get over 12,000 and stay there. I'm sure we are all looking forward to that day, and it's definitely going to come, but we don't know when. I know it would look better for everybody's 401ks. Andre, good morning to you. Today, Thursday, right after the forecast this morning, we're going to have Make Hoag Money. Here is the link to register. If you're not registered, get in there. Bring your good trade ideas. Bring the knowledgeable trader, because you're going to be making choices. We're going to be voting on them, and we're going to look forward to another positive trading day. We had made some money on Tuesday. Let's see if we can do it again today. No pressure. And I look forward to those sessions very, very much. We get the opportunity to talk trading among traders. You're going to be able to raise your hand. I'm going to be able to make you available to verbally speak. You're going to be able to share your charts. Context is, of course, very helpful when we're looking for these opportunities. And we learn a lot, and we have a lot of fun and make Hogue money. So I look forward to seeing you there. What else do I have for us here? Well, it's Thursday. We do have the podcast today at the end of the day, 3 o'clock. No recap, but we will have the Top Step podcast Limit Up. I'm looking forward to seeing what the boys are going to be talking about today. If you have trouble, if you've never seen our disclaimer, it's in the opening credits here, I guess we could call those. If you've never seen them, just pause and read through those. There's a lot of risk in trading. We all are well aware of that. There's no guarantees ever of success or even failure in that regard. Everything we talk about today is educational and meant to help you improve your processes and your ability to profit in these markets. But again, there's no guarantee of that. We always look forward to coming into these markets and having the opportunities that we have here, and thank goodness we have those. Let's talk turkey and make Hogue some money. Absolutely. Wonderful sessions. Michael H., good morning. My goodness, good morning. And Dan Trader, running late, good morning to you as well. Make sure you get your homework done before you engage in the markets. It is a tough environment. We got to make sure that we've done our homework. Right, so what do we have here? Well, we got our equities. We got our equity futures. Holding on to those early gains. Let's go ahead and jump into the chart and take a look. Let me get prepared here. We're going to start with the daily in crude. We'll go back to the daily in the S&Ps. We'll go back to crude, watch the opening, and then we'll go through the rest of these charts. I'm going to try and be finished today by about 8:15, 8:18, because at 8:20 I want to be in the room discussing trades with all of you. So again, looking forward to that. Here's the charts. Let's have a look. So again, here's the daily and the E-mini S&Ps. Volume, it was kind of low yesterday, but finally we have an up day with some positive open interest. We added an estimated 28,000 new contracts in the S&Ps yesterday. That to me is encouraging. We've been seeing open interest dropping on up days since we've started this move to the downside. I'm finding that, again, encouraging. Nothing is positive, nothing is finite in trading, and nothing is, anything can happen. Remember our little acronym ACH, anything can happen. Is this telling us that we finally found some serious buyers down here yesterday, and we may have put in a short time frame low? Without some bad news, I think that's entirely possible. The news this morning apparently wasn't bad, so we've got some continuation perhaps to the upside. Volume, again, wasn't all that great. It wasn't all that great in New York yesterday, but the encouraging part of this is the fact that we had a big boost in open interest. Take a look at the 30-minute chart. So we've started now in short time frame to put in higher lows, and we're putting in higher highs. The majority of the known economic information is already out, and the market appears to be attempting to open with a gap, which opens up gap rules for us. What are gap rules? Gap rules state if we open outside of the previous day's regular trading hour range, that creates the gap. If we can't close the gap relatively early, we need to look for opportunities to go in the direction of the gap, which would have us looking for price to continue a move to the upside. We've got 40.48 weekly kickoff high within reach this morning. It's going to be interesting to see if we get an opportunity to see price trade to that level. Always interesting, these markets. So I'm going to be watching on the open. We're going to be together and make hoog money. And we're going to see if we create a gap. And if we can't close that gap, do we start to look for longs? Very interested in seeing what our community has to say, what our little make hoog money family is looking at, and seeing if we can't get in the right side of this market this morning. So again, we've got the market putting up higher highs, higher lows in the short time frame. We've got a potential gap on the open. We have to see, of course, what happens. Again, most encouraged by the amount of open interest that this market was able to generate on an up move yesterday. Let's take a look at crude oil now. Here's the daily. 5th day in range. Volume slow. We just finished rollover. It's not rollover. The volume is just shut off here. This market is using up its ability to facilitate trade in this area. I'm looking for an opportunity as this market breaks out of this range. But I have to remind myself that while we're in range, range rules rule. if you don't mind the reiteration there. What are range rules? Well, when the market is range bound, it can provide relatively solid highs and relatively solid lows to look for opportunities to limit risk, which is really job number one. As long as we remain in this range, we're buyers near the low of the range, we're sellers near the high of the range. Sometimes you can get several opportunities in a range-bound market like this to have some pretty decent trades. But it's when the market breaks out of range where it gets a little trickier. So let's take a look at the 30-minute chart here. We added 11,000 in open interest yesterday. I forgot to mention that. This market is beginning to build energy. We're creating contracts. More contracts we create, the more traders are going to have to manage those trades, manage those positions, and I think that's going to increase our probabilities of a bigger move once we accept outside of range. Here we are. 1, 2, 3, 4, 5. Today would be day number 5. We're opening in about 2 minutes. You can almost put a line across the high here. Well, I'm calling kind of the upper extreme at 1160-ish. I'm calling the lower line down here at, let's just call it 109-ish. We've seen the market go from one end to the other, to the other end, 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 and so on and so forth. There's a pattern here that we can take advantage of as long as we remain range bound, as long as we look to buy the lows, as long as we look to sell the highs. If we remain in this range, we can print money, as I print money so eloquently put in his chat name. But when we break out, what are we looking for? When we break out of this, price is going to move. It's momentum, it's volume, it's time, it's participation that is going to give the signal that this area has used up all of its ability to facilitate trade, and price is now looking for a new level to auction to. Now, if I take this profile and I put it all the way over here, look at how even this bell curve is. This market has done a really good job of almost exhausting this area of its ability to attract business. Something has to change. When? Direction? What side of the boat do we fish off of? Well, again, it's all about acceptance outside the range. If we accept above range, we start to look for opportunities to go with that. We accept below the range, we start to look for opportunities to go with that breakout. A move back inside doesn't necessarily indicate a failure of the breakout. Sometimes the markets just like to fool around and trick you a little bit. These are going to be tricky opportunities on these breakouts, on a breakout outside of this area. Putting this profile all the way back over to the right here, Where does, there's no volume down here, no time down here, no volume up here, no time up here. This is the area where change is likely to occur, whether it's back to the center or a move outside of it. Watch the volume, participation, momentum, all of those subjective terms to see if we're actually going to catch a breakout in this. Right now, range-bound rules rule. Here's the first minute of trade. Our opening range, 11, we're expanding. Okay, we're through the opening range now. So we got 11, 11, 1, 11, 11. 111.02. Small range, small opening range so far. Actually, our opening range is to here. I don't know why it's expanding. So opening range was 1121 down to 11, whatever this is here, 1107, 21 to 07, 14 ticks. Not bad. Overnight inventory, long, trying to push back into value, back into, again, finding resistance at our high up here, at our high of this balance area. This could provide another opportunity for price to get back down to settlement, back down to point of control, back down to low of value from yesterday, or a move all the way back down to the low. We don't know. All we can do is follow the rule. Range bound, short the highs, buy the lows, until proven wrong. Proven wrong means acceptance outside, and then we go with it. It's going to be very interesting to see when that day happens. I'm looking forward to seeing that example. Nasdaq. Nasdaq is a similar but different. Tech sector still showing more weakness than anything else. We lost open interest yesterday. I find that very interesting. S&P's had a pretty big boost unless the preliminary number is very wrong, which does happen from time to time. But we're showing a loss in open interest yesterday. So we did not see, according to the open interest, any new business, any new buyers coming into this market. As a matter of fact, fewer contracts is less energy, actually. So it's trying to hold up. It is trying. How good of a job is it doing? Not as good of a job as the S&Ps. Day trading, we're going to look here at the 30-minute chart. We have much less of a probability of a gap in the Nasdaq than we do in the S&Ps. Which one's going to lead? We got 1, 2, 3 points of contact. S&P is putting up higher highs. Nasdaq not necessarily, although it is putting up higher lows. So we got a little bit of a coiling situation going on here. That high trend line here, it does look like it might be something that we might be able to use to limit risk if we're looking to sell the high of the range that we've got here in the last 3 to 4, 5 sessions. And of course the kind of viewing this as somewhat pivotal to the upside is this trend line here. Take a look at gold. Gold, today is switch day. The volume, however, this morning was still greater in the June contract. So I'm going to probably trade June contract today if I choose to trade gold and switch to the August contract by tomorrow morning so that we can find the most liquid of the markets. It's not going to be very liquid in either month today because it is switch day. We have a short time frame uptrend that does not appear to be doing very well. Yesterday we lost 2,200 in open interest on this kind of pullback off that high. Again, it's difficult to read volume and open interest during rollover, especially so close to switch day. So it's a hard read today. Weekly kickoff high was resistant last night. We'll see that more clearly, I think, on the 30-minute chart. Here's the 30. We got settlement here at 1846.30. Are we holding longs or are we holding shorts, or are we somewhat mixed as far as overnight inventory is concerned? I'm looking at this as we opened up here. 1700 is the open. We opened here. we're trading here. I'm looking at this market as being a little short in the overnight inventory. Shorter, weaker hands, short time frame traders holding shorts. I'm kind of looking at that as a potential for the market to give us another opportunity at weekly kickoff high. If our shorts to start to get nervous and get out, they could easily bring price to that, which could offer us a decent opportunity to limit risk. But knowing that it's rollover, that it's switch day, that the market is illiquid, that the market is not providing good information as far as volume and open interest is concerned, my consideration for gold today is to put it on the back burner. Put it on the back burner. I think it's going to be a tough read today, and I've been wrong before. Now that I've said that, it should be a really good trading day in gold because I said that. Euro. Profit taking yesterday, above weekly kickoff high, losing 2,500 in open interest, losing open interest on the pushback. Does it appear that we might be forming a bit of a bull flag here? We're still holding above weekly kickoff high. We settled above it. We've got some opportunity near it if we pull back to that level today. What other notes do I have? Well, more about that bull flag. It's kind of hard to kind of look at it the same way on this 30-minute chart. If you were to do that, you'd be looking at the fact that we may already be kind of breaking out of that bull flag. We've got, as our good friend Matt Hoyt calls it, frequency 1, 2, 3, 4, 5 points of contact as resistance. It's pulled back to and found support. Do we have overnight inventory here? Not so much. If we do, it might be a little bit long. Gap rules. Well, it looks like we have not yet closed the gap. So if that's the case and we haven't been able to close the gap, I'm going to be kind of looking for opportunities to buy weakness in this market. Now let's take a gander here at the 10-year. Okay, it's in rollover as well. Volume is still greater in the June contract this morning, so I've remained on the June contract, and if I were to trade it, it would probably be the June contract. Tomorrow, I'm looking for the September contract to have more volume first thing in the morning, and then I'll switch everything over, make my adjustments on my charts according to the discount or premium from June to September, and we'll start with the new contract. And we'll look forward to rollovers being over, but we still have a couple of big ones. We have currencies and we have equities rolling over in a couple of weeks. All right, here's the daily. We like to start with the daily. Longs took some profits. Rolling to September, rates slipped below 2.8%. This rally does seem cautious. It's just taking steps and seeing if it holds. Taking steps and seeing if it holds. Losing 19,000 in open interest yesterday. We're squeezing out maybe some continuous, always short traders. 30-minute chart. Overnight inventory. Here's our opening bar. If there's an overnight inventory, it may be a little bit long. We're in range above value. Early session down into value shows rejection. So I'm still kind of thinking of looking for opportunities to buy weakness in this market as long as rates continue to slip to the downside. But again, the fact that it's switch day today in the middle, in the teeth of rollover, I'm backburnering this for myself as well. But in range, stay patient. Remember, it's rollover. Markets act a little bit crazy. Sometimes they don't go far enough. Sometimes they go too far. And for our natural gas, we had an up day yesterday on some pretty good volume. We lost 8,000 in open interest, and everybody was very fascinated by the fact that we were up above $9, and $9.20 is the swing high from August 2008. We took some profits up here, ladies and gentlemen, and why wouldn't we? Why wouldn't we? Structure is still strong to the upside. Got an inside extended trading hour range today. May get a little bit of a hangover day today, so we got our move up above weekly kickoff. Our continuation met with some long liquidation to the downside. Overnight inventory, nothing really to speak of. In range, yes. Stay patient. Love an opportunity for the market to come back and retest this level down here, the last week's high. We've got weekly kickoff high. It'll be a great opportunity for us if the market even gives us that opportunity. Still looking to buy weakness above this weekly kickoff high. Markets. Fascinating. And you know why they're so fascinating? Because they're people. It's always said that markets are irrational. And I think markets are rational. It's the people who trade them that are irrational. Markets don't do anything that we don't have them do. And I believe thoroughly that they are telling us what they're trying to do. It's up to us to decide. Is it doing a good job or isn't it? Fascinating. All right. See if we have any other thoughts, or eyes, or questions. Buying weakness today. Good luck, everyone. Live for tomorrow. Mid-Country Gaming. Gold Fishing. PD. Good luck, everyone. Yes, of course. All right. We're going to call this a forecast. Looking forward to seeing everybody in Make Hogue Money in just about 5 minutes, maybe a little bit more, but we get things set up for us, and I'll be in the room as soon as I can get prepared. I'm looking forward to a good session. Bring your knowledgeable trader, bring your trade ideas, bring your microphone, bring your screen if you want to. Looking forward to another good session. So take your deep breath. Stay humble, grateful, creative, and all the other adjectives that we can put on ourselves that we try and do while we're actively trading. How about calm? There's a good one. Trade well today. Get out there and profit. Looking forward again to seeing everybody shortly. And if I don't see you, blessings. Be good to yourself. Be good to others. Be kind. Keep praying for world peace. And hug your loved ones. All right? Blessings. We'll see you in a few minutes. Trade well.